Ryanair shares, they are under some pressure this morning, down about 5%. Quarterly earnings falling by 34%. That's amid higher fuel costs, weaker fares, and consumers delaying bookings since the Iran war began. Joining us right now is Ryanair Group's CFO, Neil Sorahan. Good morning, Sorahan. Europe's largest budget airline, Boeing's biggest customer outside the United States. Tell us what's going on, and not just what happened last quarter, but sort of what you can see going forward at this point.
Yeah, well, as you said about the last quarter, we did see the impact of the Middle East crisis on unhedged fuel. I mean, Ryanair is very well hedged. 80% of our fuel bill is hedged out to the end of next March at $67 a barrel, but the 20% unhedged doubles to almost $150 a barrel in the quarter just ended. That said, you mentioned Boeing. We'd got the last of the Boeing 737-8200 game changers into our fleet over last winter. So thanks to having all of those 200 aircraft or 210 aircraft, we had a fleet of just under 650 aircraft and grew traffic by 6% in the first quarter of the year. We'll grow overall by about 4% this year to 216 million passengers. I think, interestingly, you're going to see a shakeout in capacity in Europe as a result of what's going on in the Middle East. There's a lot of carriers out there, don't have the cost base that Ryanair has, doesn't have the balance sheet. Like we paid down our final bond, 1.2 billion in May, so we're now effectively debt free, and we own all of the assets. So I think once you get into the kind of winter period, some of the weaker carriers are going to find it very difficult, and we may see some failures over the next number of months.
When you say failures, you're talking about bankruptcies. I'm imagining, is that an opportunity would you buy anybody or buy pieces of airlines if you think that there's going to be that kind of destruction?
No, I'm not particularly interested in buying any other airlines. Reason being, they all tend to not own their aircraft, have very expensive leases, have pension deficits and all kinds of stuff that we wouldn't want to take into Ryanair. What we do is we buy aircraft at the right price. 300 MAX 10s due to start delivering from January of next year. We bought those aircraft at prices during COVID, so very good pricing on that aircraft type. That's going to see us grow to 300 million passengers per annum over the next decade. So by March 2034, we'll be carrying over 300 million passengers across Europe every year.
Are there certain routes that are just now off limits, or are you finding that folks are still booking?
Oh, we've over 715,000 people flying with us today. No shortage of bookings, no shortage of people traveling. They're just booking that little bit closer in. I think there was some hesitancy back early in the first quarter where there were some concerns around fuel supply. We all know that's not an issue. Lots of fuel to get people out and back home again. Just good value for consumers in the market at the moment.
And when you think about pricing, you've been obviously the discount player, but as these prices go up, what's going to happen to margin, and how are other players going to be affecting the way you think about discounting?
Well, I think you're going to see, as we just discussed, you're going to see capacity coming out of the market. The M&A is continuing across Europe. There's going to be failures. Capacity comes out. That means there's more risk to the upside than the downside on fares. So I think when you kind of look beyond this year into next year and beyond, pricing way, and that's up. At the same time, our cost advantage over everybody else continues to improve. The next nearest competitor to Ryanair in Europe, their unit cost ex fuel are some 80% higher than ours, and then the number two are at 150% higher than Ryanair. We're seeing more and more airports coming to us on the basis that they don't see the longevity of competitor airlines. They want to make a return on their car park, their hotel, and their shopping mall, and they know that Ryanair can deliver the volume. So we're locking in very good airport deals, and then of course the MAX 10 aircraft is going to deliver significant savings. It's 20% lower fuel burn, 20% more passengers, which drives productivity, volume growth opportunities, and more ancillary revenue opportunities.
That's where I was going to go, though, which is what do those deliveries look like right now? When we first introduced you, we said you're the largest Boeing buyer in Europe. And I know there's been a question just about getting some of those planes.
Oh, well, we're not having discussions now anymore around when the aircraft get certified. We're having discussions around entry into service. When do Boeing need galleys and seats in Seattle? So we have a high level of confidence. Boeing tell us that the MAX 7, the smaller of the MAX aircraft, will be certified in the near term. Was out last week saying that. We spoke to Boeing last week, and they're expecting the MAX 10 to be certified in the late summer. It might slip into October, but our 15 aircraft, the first 15 that we're due to receive in the spring, are very much on track, and we're now planning on the basis of getting those aircraft.